All right, so you're interested in Instacart, and not just for like those late-night ice cream emergencies. Today, we're diving into the heart of this grocery delivery giant, their business model, how they battle the competition, and whether their stock is something you should be watching. Expert speaker, are you ready to unpack this with us?
Absolutely. There's so much more to Instacart than meets the eye. What seems like a simple app is actually transforming the entire retail landscape.
It's fascinating how many hats they wear beyond just delivery, right? They've partnered with retailers, collaborated with brands, and even created a whole sector of job opportunities.
Precisely. They've strategically positioned themselves as a vital link in the retail chain, and their evolution has been remarkable. Remember when they were known as Maple Bear Inc.?
Oh, right. That rings a bell.
Their public offering in September 2023 marked the turning point. Since embracing the name Instacart, they've been on a roll. For instance, they've managed to partner with a staggering 85% of the U.S. grocery market.
Wow.
But that kind of reach puts them shoulder to shoulder with retail giants like Walmart and Amazon.
That's a massive customer base. But it makes you wonder, with that kind of foothold in groceries, why are they branching out into other areas, like Home Depot and Sally Beauty?
That's the million-dollar question, isn't it? It seems they see potential beyond the grocery aisle, testing the waters in various sectors.
Hmm.
This begs the question, what does this diversification strategy mean for Instacart's future and the future of the retail industry as a whole?
It's a bold move for sure, but let's talk about a different kind of delivery. Their advertising platform. They've tapped into a gold mine, with users scrolling through their phones, deciding what to buy.
It's a captive audience, ripe with potential for targeted advertising. What's fascinating is how this benefits both sides. Brands gain a more transparent and accountable advertising avenue compared to traditional methods, while Instacart unlocks a completely new revenue stream.
It's a win-win for sure. But they haven't stopped there. Instacart is making waves with their in-store technology too. Those Caper AI-powered shopping carts. What's the story there?
Picture this. You're pushing your cart through the aisles, and it's not just carrying your groceries, it's acting as your personal shopping assistant. The Caper Cart uses AI to tailor deals and promotions specifically to you as you shop.
Okay, now that's just cool. It sounds like something straight out of the future. But let's talk about the bottom line. Are they actually profitable with all these innovations?
Now, this is where it gets really interesting. Instacart isn't just surviving, they're thriving. We're talking 3 consecutive profitable quarters. Their adjusted EBITDA, essentially a measure of their core profitability, and operating cash flow are both showing significant jumps.
So they're not just another flashy tech company burning through cash. They've cracked the code to profitability.
They absolutely have, and that's a major strength in today's market. Last year alone, they transformed roughly 20% of the revenue, a whopping $623 million, into free cash flow. That's incredibly impressive for any company, let alone one in the platform delivery business.
Wow, those numbers certainly paint a picture of financial health. But with the surge in online shopping, how is their revenue growth holding up? Are they keeping pace?
Excellent point. While their revenue growth has experienced a slight slowdown, it's crucial to remember they've more than doubled in size over the past 3 years. However, they recently reported a 15% year-over-year increase.
Okay, so not a bad increase.
Yeah,
Especially if they're laser focused on profitability, right?
exactly. And here's the kicker. That 15% increase marks their strongest performance in a year. This suggests they might be turning a corner and poised for even greater things.
So we've got a company that's not only profitable, but expanding into new markets and demonstrating strong signs of revenue growth. It all sounds quite promising. But how does their valuation compare to competitors like DoorDash and Uber Eats?
That's where it gets interesting. Instacart is actually valued quite reasonably compared to those two. To put it into perspective, their enterprise value, which is basically the total value of the company, is just 3 times their trailing revenue.
3 times. That seems surprisingly low.
It is. To compare, DoorDash's multiple is more than double that, and Uber falls somewhere in between, even when you look at forward earnings multiples, which consider future earnings potential. Instacart still comes out ahead.
So even with the slight dip in growth, they could be undervalued. But there's got to be a reason for this discrepancy. What are the risks that investors are considering? You're right, there are always risks. What could potentially derail Instacart's momentum?
Well, let's not forget about the competition. We've touched on DoorDash and Uber Eats, but the real titans in this arena are Walmart and Amazon.
Those are some serious heavy hitters. They've already got massive logistics networks and customer bases. How can Instacart stand up to that kind of pressure?
That's the billion-dollar question, isn't it? Currently, Instacart holds the advantage in grocery delivery. But what if Walmart or Amazon decide to flex their muscles and capture a larger share of the market?
What could that look like? How could they shift the balance of power?
Imagine this. Walmart and Amazon open up their delivery platforms to smaller retailers who can't afford to build their own infrastructure. That move could significantly cut into Instacart's market share.
So Instacart's position as a middleman, connecting consumers to these retailers, becomes vulnerable if the giants decide they want a bigger slice of the pie.
Precisely. But in fairness to Instacart, they haven't built their success by accident. They've cultivated strong relationships with both smaller retailers and those big consumer packaged goods brands over many years. They've also invested heavily in technology, tailored specifically for grocery delivery. With features like those inventory prediction tools that we talked about earlier, those tools give them a leg up on platforms like DoorDash and Uber Eats.
Right. Specialization is key. Knowing whether that gallon of milk is actually on the shelf before someone makes the trip is crucial for a smooth delivery experience. You mentioned economic factors earlier. How could a potential downturn impact a company like Instacart?
That's a critical consideration. When times are good, people are often happy to pay a premium for convenience. But when budgets tighten, those grocery delivery fees might start to look less appealing compared to hopping in the car and heading to the store.
Especially since grocery store margins are already razor thin, right? They don't have the same flexibility to absorb those delivery fees that a restaurant might.
Exactly, and that's reflected in Instacart's take rate, the percentage of each transaction they keep. It's notably lower than what DoorDash or Uber Eats command, because they're operating within those tighter grocery margins.
So there's this constant balancing act for Instacart. They need to find a way to keep growing, stay profitable, and ensure everyone, from customers to retailers to investors, stays happy. That sounds like a tall order.
Absolutely. And we haven't even factored in external forces, like fluctuating fuel prices or rising labor costs, both of which can directly impact their bottom line.
Okay, so we've covered a lot of ground here. We've looked at Instacart's advantages, their potential for growth, the competitive landscape, and those economic uncertainties that loom large. So what does this all mean for someone sitting at home, maybe considering adding Instacart to their investment portfolio?
That's the question, isn't it? It's never easy to predict the future. But we can analyze the current landscape. On the one hand, Instacart is the undisputed leader in a rapidly expanding market. They have a proven track record, a robust technological foundation, and a clear path to continued growth.
There's always a but, right?
But they face intense competition from well-funded rivals, and a potential economic downturn could throw a wrench in their growth plans. It's a delicate dance between potential and uncertainty.
So is Instacart a risky gamble? Or could this be the company that emerges as the Amazon of the grocery world?
If only we had a crystal ball. What we can say with certainty is that Instacart is at a pivotal juncture. They've demonstrated the viability of their business model, they're consistently profitable, and their valuation remains attractive compared to their competitors.
It sounds like they're well positioned to capitalize on the growing trend of online grocery shopping. But there are still hurdles to overcome.
Precisely. The next few years will be telling. Will they maintain their leading position? As the grocery delivery landscape continues to evolve, it will be fascinating to watch it unfold.
It really makes you think about the future of grocery shopping.
Will we even need to leave our homes to navigate those crowded aisles and impulse buys ever again? That's the billion-dollar question, isn't it? Instacart is certainly betting on a future where digital grocery shopping becomes the norm rather than a convenient exception. They're not alone in this either.
And you've definitely got me thinking about the bigger picture here. It's not just about Instacart, is it? This is about how technology is fundamentally changing the way we shop, eat, and even think about food.
Exactly. And it's not just about convenience either. Instacart is collecting a treasure trove of data about our shopping habits. This information is valuable to brands and retailers alike, offering insights into consumer preferences and trends that were unimaginable a decade ago.
That's a great point. This data could be used to personalize shopping experiences even further, optimize supply chains, and even influence the development of new products tailored to our specific needs.
Imagine opening your Instacart app and seeing a list of recommendations generated not just by your past purchases, but also by what's trending in your neighborhood, what's seasonally available, and even what complements your dietary restrictions or preferences. That's the kind of future Instacart's technology is building towards.
Wow, that's a whole other level of personalization. It seems like Instacart's journey is far from over. Thank you so much for taking us on this deep dive into the world of Instacart, expert speaker. You've given us a lot to consider.
My pleasure. It's always exciting to explore these evolving industries and see how they're shaping our world.
Absolutely. And for you listening, we hope this deep dive has given you some serious food for thought. Next time you open that Instacart app to order those late night snacks, take a moment to appreciate the complex network of retailers, brands, shoppers, and technologies all working behind the scenes to bring those groceries to your doorstep. Until next time.